These signals are provided for educational purposes only and should not be treated as investment advice.
This is Huskins with the Forex Training Professionals reporting on the trade which we provided for educational purposes only on the CAD JPY pair following the news from Canada, which was the GDP news. The GDP monthly ratings turned out to be just as expected. On However, the previous month the yearly ratings were changed. The yearly numbers were changed. The monthly numbers turned out to be just as expected. Let me put that for you all. However, the yearly numbers were revised much lower. This meant that we could see a weakness in the Canadian dollar. And looking at the Forex currency strength meter, we did see that the Canadian dollar fall um, when the news was released. We saw the Canadian dollar fall when the news was released. Uh, we also saw that at that time the most significant currency to rise was the CHF, followed by the Japanese yen. Since the CHF was already consistently strong, if I wanted to maybe play a reversal trade. I wasn't going to look at the CAD CHF pair, and I looked at the second best alternative, which was the CAD JPY. Uh, we pulled up the CAD JPY chart, and the 5 minute chart gave us a potential entry at 79.04. However, we did not take that entry because our stop loss parameters would need to be significantly lower, as I will explain looking at the top-down analysis. We then looked at the daily chart on the CAD JPY. The CAD JPY daily chart gave us a potential reversal point from 78.78. We plotted that on the 5 minute chart, and then we looked at the 4-hour chart. The 4-hour chart did not give us any significant reversal points. However, it did tell us that we were in a 4-hour downtrend, and if at all we were to get into a long CAD JPY position, we need to respect this downtrend, and we got a number of 80.99 or 81 as a potential resistance level for a long trade if we enter into a long trade, and that's what we plotted on the 5 minute chart as a potential exit level. Looking at the 60-minute time frame, we found two um, candlestick formations. One was an uh, morning star, and the second one was a bullish engulfing pattern. Both of them were at 78.83 level, which was plotted on the 5 minute chart. Then we looked at the 15-minute chart. At the 15-minute chart, a significant level was this hammer which was formed. It as well as the 79.04 level because of this bullish engulfing. So 78.70 and 79.03 were significant levels. That's the reason why we why I mentioned that the 79.04 could be a potential reversal area, but to place my entry out here would mean that I would have to place a very wide stop, and it did not cut my risk reward. So I did not take advantage of this particular support level. Apart from that, we had a potential reversal area from the 15-minute chart at 78.70. Now, to put our stop losses, we needed to be significantly lower than uh, than this price, which was the low. So whatever price we enter in, we needed to be significantly lower than 78.40 because we do not want to be run down uh, on stop triggering. People who go long on a trade would have their stop loss at or just below the 78.40 handle, and for us it's very important not to get uh, stopped out of a false trade or a false breakout, and that is the reason why we settled for a 60 pip stop, which would provide the stop at 78.20. So the trade alert which was issued was to buy the CAD JPY at 78.60 with a 60 pip stop and a 120 pip target. The 120 pip would mean that we'd exit at the 81.00 handle. Thank you. I hope you all enjoyed this presentation. You can send me any questions you have at hg@huskins.ca.